Hey, good evening. I'm Dan Fitzpatrick at StockMarketMentor.com, and it's Monday, October 12th. I want to get into this video about Under Armour, and here's my thought. The company, I've been bullish on this company for a long time because I use their products. They're great. They're awesome. And so what we want to do here is set up for earnings. You look at this stock, there again, I don't know if I mentioned it before, I forget. They report on October 22nd, that's 10 days from now. You look at this stock, and the last time it was right to sell the stock was like back in 2007. I mean, the stock has just been a monster stock like Nike, but we're not talking about Nike, I'm talking about Under Armour here. But here's the thing, you look at the daily chart. So let's say you're not long Under Armour and you want to buy, but the problem is that earnings are 10 days away. You're going to kind of feel foolish if you load the boat now at $103 and then the stock falls down in reaction to earnings. So I've got a trade here for you that's really not a trade. It's a way to get into the stock, and it's actually pretty simple. Let's say you have, and you need to have, a specific amount of money that you are putting into any given stock. You want to have some, you don't just kind of, I got a hunch, I'll buy a bunch on this one. You want to know exactly what your position size is from a dollar standpoint, not a share standpoint. Now, here's what you do. You take half of that amount right now. You buy half of what you typically would as opposed to the whole thing. And then you sit here and you look and see if the stock falls, let's say they report poor earnings. Well, the last time the stock took a big hit, look what happened. It comes down to the 200-day moving average and then rallies. So if this company reports earnings that disappoint the street, you're probably going to see another move to the downside. When or if that happens, that is when you put your other half of the money to work. And so what's happened? Okay, let's say the stock falls all the way to the 200-day moving average. That's a 20% loss. Pretty big deal if you bought a full position. But if you bought just a half a position, you've effectively got a 10% loss, which is a drag. I mean, who wants to take a 10% loss? But you're not selling. You're buying more. And so then as the stock rallies, you've lowered your cost basis on your initial entry, and you're in a position of strength. You got the stock essentially in between the pre-earnings price and then where it reacted to the downside. Now, why would you do that? Why not just wait? Just wait until the stock sells off after earnings and then go ahead and buy it. Well, the problem is we don't know whether that's going to happen. This is a pretty strong uptrend here. And if the company reports great earnings and gives good guidance, now the street's already expecting a lot. But if it gives new guidance, the next thing you know, it's at $110 and you're not able to buy some stock, and now you're really feeling like you missed the boat, because who wants to buy the stock at $110 when it will then even be more overbought from the 200-day moving average? So my suggestion here is get long Under Armour, but just scale into it first before earnings, and then see what happens with the stock after earnings, and then you're in a position to win. Okay, members, over to the strategy session. Got some pre-earnings plays for you.